Hello again, everyone. This is the free market update for Saturday, November 4th. We're going to start off here with the Dow, and this is the daily chart. It was up 23 points yesterday, just a tight little doji candle. It's interesting that we had 3 out of 4 last days here this week were little doji candles. We had a decent move on Thursday. The SPX kind of did the reverse of this on Thursday, Friday. But this continues to trend above the Keltner channels, continues to trend above the 10. We still don't have this breaking down at this point. Let's take a look at the weekly chart on the Dow. And you can see we're up 105 points for the week. Very much similar type range as what we had the previous week in here. So why do I have 2 trend lines here? Let me tell you what I did. I connected the low of intermediate wave 2. Well, actually, it was the end of intermediate wave 2. We had a running flat, okay? Then we had a strong zigzag intermediate wave 4. And so the end of wave 2 and the end of wave 4, you take a line and make it parallel and project it from the high of wave 3. And that's the lowest line here. That's this first one right here. Then what I did was I said, well, let me make a parallel line to that and see if that doesn't fit the highs a little bit better in here. And it turns out it does. Now, it doesn't quite catch that one. It all depends on how you line it up. It catches a lot of these highs back here in 13, 14, and 15. And what that does is that shows that we're right in here, just hugging that parallel line, hugging the top end of this long-term channel, okay? And yeah, we've done that before. We hugged it, and you can kind of bop in and out a little bit in here, so we'll watch and see what develops. Right now, we don't have a breakdown, but this gives you a little bit of perspective. I also believe that we are in the 5th minor wave of the 5th intermediate wave, and the 5th wave is always the final wave. And so right now, we're watching that. I think we're very close. We just haven't seen a breakdown yet. The VIX, this is in sync with where we're at with the market, the Dow at all-time highs. This is at a new all-time closing low on the VIX. We had one here on October 5th, which surpassed the low that had been back in, I think it was December 1993. Well, we just went and edged below that low here on Friday, closing at 9.14. So there is absolutely no fear in the market. The volatility is extremely low. All right, let's take a look at the XLF. This is what I'm focusing on this week. This is the financial ETF. And this has insurance companies and banks and large financial institutions in this index. So back here into mid-year, I thought we were getting a potential head and shoulders top in here, but it never broke down. It never broke below the neckline, and it failed right here in early June when it broke above that right shoulder, okay? This was a shoulder, a head, a right shoulder. We were getting good symmetry. It looked like a perfect top, and then it continued to push to the upside. What have I done in here? This is where the Federal Reserve raised interest rates, okay? So December 2016, and then in March, and then in June. Now, we also raised them back here in December of 2015. This was actually the very first time that we raised interest rates. I say we. I mean the Federal Reserve. Well, I had to get a drink of water there. Sorry about that. The Federal Reserve raised interest rates since 2006, okay? And where are we right now? We are at the range, and they started quoting ranges back at the end of 2008 when they lowered it to 0, 1 to 1.25%. When was the last time we were at 1% on interest rates? Well, you got to go all the way back to the financial crisis. And in October 29th, they kept lowering all throughout from 2007 into 2008, and they lowered it to 1% October 29th of 2008, okay? And it wasn't more than like 6 weeks later, they lowered at a full percentage point to 0. 0, this is the first time they started using the range, 0 to a 0.25% on the federal funds rate. So What's the federal funds rate? The federal funds rate is the rate of interest that banks can lend to each other, use to lend to other banks. And the discount rate, which is about 0.5% higher than this, is the rate that the banks can borrow from the Federal Reserve. All right, so this is the picture. The main thing I'm looking at in here is, are we seeing any kind of breakdown? And so far, we have not seen that. So let's take a look at some of the banks in here. Bank of America. Now this one, let me rescale this. From the February 2016 low, I'm counting 5 major waves up. Strong wave 3 in here, sideways wave 4 after a sharp wave 2 pullback. That all looks beautiful from an Elliott wave perspective. So we are in the 5th minor wave, the 5th wave of this move in here. This is all in sync with what's going on within the market indices and the Dow also. So based on that, I am looking for 5 waves in this last minor wave, 5th minor wave. My projection on that is that we're going to get up here around 30.13. Let's call it 30, okay, for Bank of America. So we'll watch and see. We continue to push one more time. Let's take a look at JP Morgan. A similar type thing on JP Morgan. Got to rescale that. Similar type thing. I'm ignoring this kind of an anomaly that happened on August 24th. That was a Monday, that huge crisis that happened with China devaluing their currency. And remember that everybody was panicking to get out. I'm calling the low here in January, February. This is the low when all of the major indices put in their low. Okay, so here's 1, here's 2, here's a strong 3, here's a pullback 4. And now we're into a 5th wave, okay? So I'm not seeing 5 waves complete yet. And I've got a projection up in here. This projection is based on the look and strength of the various Elliott waves that have occurred so far. So when I look at this, and I looked at the projected top, right now, I think we've got 1, 2, possibly 3, 4, and the 5th wave, just like I talked about on Bank of America. We've got a top, I'm projecting 103 to 107 in that range. So we'll look to see if these guys continue to push one more time. Citigroup, I think, has already completed 5 waves. Okay, so I think the 5 waves are in on Citigroup. I'm counting again from that low in February. 1, 2, 3, 4. Here, sideways type flat on an Elliott wave correction. And I think we've pushed up here. I'm calling this wave 5 complete. So now I'm watching very close to see if we start to break down in here. And so that's what I'll be looking for on Citigroup. All right, that's the picture on the financials and the 3 major banks. Okay, so I hope you found that helpful. And head on over to the website if you're not watching this on my website. And opt in for the free market updates that I put out. I put them out, very short, brief market updates Tuesday and Thursday, as well as this one here on Saturday. So opt in for that. You'll get notifications. Everyone, have a great weekend. We'll talk to you on the next video.